Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. Before we get into our discussion today, we want to say thanks for the questions coming from our audience at SmithWeekly, including Dale H., Peter S., Cindy W., Miska K., and Todd A. So today we are talking with Alex Holmes, CEO of Plateau Energy Metals, a uranium and lithium focused developer with projects in Peru. The company is listed on the Toronto Venture Exchange under symbol PLU and also in the U.S. OTC markets under the symbol PLUUF. Alex, thanks for joining us.
Thank you, Andrew.
So, Alex, give us your background, going back with your time with True Gold and your work at Oxygen Capital.
Sure, thank you. So I'll even step back a little bit farther than that. I spent about 10 years in investment banking, and through that process gravitated towards the mining side. So I've been involved in a number of transactions from financings to growth M&A and ultimate takeout transactions. And along the way, forged a very strong relationship with a good group of mining professionals, and one of that group was Mark O'Day's group. Had great success with Frontier Gold among one of the successes. And in late 2011, I actually left the investment banking side and joined Mark and myself and two other founders. We formed Oxygen Capital as an incubator house, having some shared services, but really bringing together some really strong professionals from the technical and financial world. And what we did was we built 4 companies over a 5-year period. One of those, which was a very recent success, was True Gold Mining, and that was actually a merger between effectively a management team with some capital and a company looking for capital and to bolster strength. And that was a PEA, a preliminary economic stage gold asset in West Africa that we took from that to gold production, actually, in a very challenging gold market over about a 3.5-year period. So right through feasibility, we grew the resource by 50%. We got it permitted, we project financed it, built a construction team, and had over 1,000 employees at one point, and ultimately led to gold production in April 2016. And then that was acquired by Endeavour Mining. And my role there was on the business development side, working very closely with Mark, who was executive chairman, and the management team. And along the way, we also had other companies, other successes like Pure Gold, which is in Red Lake, Ontario, a gold asset. But that was really a big part of kind of honing my skill set in and getting me ready for being able to bring my skill set to the table to take companies like Plateau with a PEA stage uranium project and an advanced exploration lithium project through those various milestones of value creation and sourcing capital and the team and moving them through those various de-risking events.
Okay. So, Alex, why did you come to Plateau, and tell us what value proposition you see with the company?
Yeah, I came to Plateau. I was approached by a couple of directors earlier in 2018, and when I looked at the opportunity, I peeled back the layers of the onion. And from my Oxygen days, we looked at literally hundreds of projects, so I had a good background in being able to assess the value of projects. And what I saw was actually 2 projects. The new lithium discovery had been advancing very rapidly. It was very interesting. Clearly, we had there was work cut out for it to move it forward into an economic study. And the uranium project, which at the time, earlier 2018, there really wasn't a lot of buzz around uranium at that point. But it created this, it showed for me an underpinning of value to support the company. And so I saw a very clear kind of at least 3-year time horizon where we could move both assets forward. And the lithium project had the potential to be of a scale that would put it in the top 5 or 10 projects globally. And today it's actually already in the top 10 size-wise. We have our work cut out for us to move it through to that economic study, which we're targeting the end of the first half of this year. And our uranium project, funnily enough, the sentiment around uranium started to move around the middle of last year, and has actually only got stronger for a variety of reasons. And so that combined with our lithium project, really showed me that there was a big opportunity here to try to unlock the value that wasn't getting recognized at the time.
So you've been around the world in various mining projects from Africa to Canada. Why has Peru become your focus?
Sometimes it's project merit driven as much as anything. The technical aspects of the project. But Peru itself, is a mining jurisdiction. There's a lot of foreign investment. Mining's part of the culture. Mining's really been part of the culture for hundreds of years. But there's some very large companies there, and it's a top copper producer globally. A lot of gold production, and other metals and minerals that really mean that mining, what it means to Peru, is that it's a big part of its GDP, and foreign investment is key for that. And it also means there's lots of skilled labor there. So when I look at a project, I don't only want to look at the technical merits of it, but I want to look at the merits of, can you actually build this? And are there access to skilled labor? And is the infrastructure good? And is there government support for mining generally, and in particular in our projects? And I walked away with the view, and having had experience in financing companies in Peru, that there's a long-standing support for mining in that country.
Okay. So give us a snapshot of the company in terms of management team, the compensation of management, share structure, and who are the major shareholders?
Yeah, so let's start with the project. So we're in southeastern Peru. We fly about an hour and a half from the capital city of Lima, multiple flights a day. And once we land at a place called Juliaca, we're about a 3.5-hour drive up a 2-lane paved highway right to our project site. We have a hydroelectric power down about 40 kilometers away as the crow flies. There's excess capacity there. There's a high voltage transmission line. There's water, plentiful water available in the area, and there's ports. So it really checks the boxes when it comes down to infrastructure, when you look at it from the ability to actually build a mine in an area. Our two projects are actually on the same land package. So the overall land package is about 930 square kilometers. Plateau has actually been working in the area for about 10 years. And the reason I mention that is it's a big part of maintaining those community relations. A key part of any mining company is we're really the guests, and we're being hosted by the local communities. But being there 10 years and continually working through that, we've been able to build up some great trust and strengths in that regard. So within our land package, within that 930 square kilometer land package, the Uranium Project is actually the genesis of the company, and that came together over a period of a few years and was expanded by the geological team. And that's about 124 million pounds of uranium in 43-101 resource categories, which is quite significant globally. And then within that, there's been an economic project scoped out of about 70 million pounds. So a 10-year mine, roughly 6 million pounds a year. Initial capital-wise is very financeable, and cash cost-wise puts it competitively on the world stage of development projects. And then if we go about 25 kilometers to the southwest, we've got our Falciani Lithium Project. And there seems to be a bit of a misunderstanding out there that the Lithium Project and the Uranium Project are one and the same, but geographically they're about 25 kilometers apart. So completely different. And like I said, all within the same land package. And there was a first resource. From discovery, the first resource was about 9 months. It's approximately 2.4 million tons of lithium carbonate equivalent. That puts it in quite a nice spot in terms of being between 2 and 3 million tons. And what we decided, as I came in last year, I joined in August, and as we said, let's continue exploring. We know it expands out to the west. We stepped out to the west. We drilled. We hit. We've announced these results. And we continue to drill right through to the end of the year, expanding what we already knew was happening east of there. And the reason we want to do that is, one, it gave us some flexibility when we think about mine planning, but B, it's going to put us into a place where there's not a lot of projects of this size and scale and that's a good place to be when we control 100% of it. So that's our project. So we look at our board and management team. I've given you a bit of background on myself. One of our co-founders is Lawrence Stefan. He's our COO. He's ex-big company guy from South Africa, so Anglo, Goldfields, JCI, and he's been in Peru for about 20 years, and he's helped assemble our team, which is largely Peruvian. Our general manager there is Peruvian. He's a lawyer by background, speaks the local dialect in the communities we work in, which really goes a long way. Again, like I say, we go back to the importance of community relations for any mining project. We have a strong board that has a cross-section of people with uranium experience, people with operations experience, and finance experience. I think it's always important to not only have people that have done things on the desktop or been only involved in the public market space, but have actually had boots on the ground and built projects and operated them. So we have a great cross-section on the board that way. In terms of compensation, it's actually we're a fairly skinny team. So I have myself and our COO. We have a part-time CFO and our team in Peru. And for the most part, the team in Peru is more or less, it's 100% project focused. So we run a fairly low G&A budget, where about 80% of our budget is all project specific. 20% is between corporate overhead and the cost of being public with exchange fees and things like that. So I think it's quite competitive that way, because you'd asked a question about compensation. I come from a camp where culturally we're not looking for employees, we're looking for owners, which means we really try to align equity incentives rather than cash incentive with not only our management group but up and down the organization. So we do focus on options and people being shareholders. We're about 10% insider ownership. For a company that's been around 10 years, that's actually quite positive. That's quite good. We don't often see that. Myself, I came in May of last year at 60 cents, and I participated again in the last financing, which was done at 95 cents Canadian. And then if we look outside of that, the rest of our share registry, we have some very strong high net worth individuals based here in Vancouver, and they're brokers, and themselves together with their book of clients are roughly 35% of our company, and we have some institutional ownership, roughly about 12%. It's an area I'm working on since I joined, because the company didn't have a whole lot of institutional ownership prior to that. And, really a big part of that was it wasn't that long ago that nobody really cared about uranium. And so there wasn't a large institutional shareholder base for that reason. And lithium, the discovery was new, and it was happening at a time when the sentiment around lithium was shifting in late 2017. So really this never got the attention it deserved from the broader capital markets and the institutions. So since joining, we've been able to add some institutional shareholders to the base. We've been able to have 2 analysts publish research reports on us, Hayward Securities and 8 Capital. Hayward at about a $3 target price, and 8 Capital at $2.70 target price. They look at our asset base and they say it's roughly 50-50 in terms of that value makeup. So we have our work cut out for us about getting out there, continuing to meet with long-term sticky shareholders, institutions, looking for some more research coverage from institutional groups that understand the value proposition of our assets.
Well, I appreciate the overview on everything there. How many shares are out right now?
76.9 million shares.
So are there any near-term plans to get on the TSX Big Board, or maybe upgrade the OTC listing to a QX status? Well, I haven't considered the QX status. As I'm sure you can imagine, the first few months in the hot seat there's been a lot of things to focus on. I'd like to get up to the TSX Big Board at some point, and part of that is it's as much a documentation and application process as anything. So certainly we're doing things to bring ourselves in line with being TSX eligible. The timing of that I can't comment on. And going back to the QX, to be honest, I haven't given it much thought, and I'd be interested to hear whether that's actually something that investors
place a lot of value on in the U.S.
Yeah, I think the QX is pretty simple to get. You're already QB, so it's not too hard to get up a little higher there. And then the TSX big board obviously makes sense when sentiment is improved, and maybe in a rising uranium price environment, perhaps a little more confirmation before you get too excited about TSX. But yeah, I think that's a good idea. So the Peru government, when do you expect they'll have uranium export regulations in place, and what do you see as a logistics route for the project? What port is designated for uranium export, and is there a vessel route for Class 7 cargo coming through there?
So maybe I'll start answering that question with just to make sure that we clear up what I think is a bit of a misunderstanding out there, because I think it probably hasn't been messaged, accurately. So you properly quoted it, but it's a transport and export regulation that's not in place. So under the general mining law in Peru, we can mine and produce uranium, but that's not going to do us much good if we can't transport it to port and export it to a conversion facility. So in August of last year, the president of Peru came out and said that the Ministry of Energy Mines is working on a legal framework for this, and we will have it in place within 6 months. That would take us to February, and I'm optimistic, but I think February might be a little bit soon for that. But what I can say is we've been working closely with the Ministry of Energy Mines and obviously lobbying efforts throughout time to show that we've got a project of merit here. This is actually significant as it plays a role for Peru in being part of a clean energy. It's a 24/7 stable energy supply source, being nuclear power. And the government understands that. The government's a founding member of the International Atomic Energy Agency, which is something you have to be a member of that agency in order to be able to produce, transport, and export uranium. So that's a positive. They have a research reactor in country, which is mainly medical isotope based. But again, a positive because it means they have an independent nuclear agency. And what we are aware of is the government is effectively looking at all the frameworks that Canada, the U.S., Australia, etc., have in place already as uranium producing and exporting nations, and effectively pulling together the best of the best. So they're not having to start from scratch. So I think it's very positive. We have presidential level support, and as well as ministerial and independent nuclear agency level support. And in terms of where we would transport the material, I mean, that's yet to be finally determined, but we have 3 ports that are within about 400 kilometers of our project, which 400 kilometers, call it 300 miles, is not actually that far. One of the ports, the port of Ilo, is actually quite an active port with there's a lot of exports that go through that port. And then we would look at various offtake partners. So we identify the conversion facilities this is ultimately go to so that it can be converted into a energy fuel product for reactors. So the key thing to bear in mind is the transport and export legal framework is all related to the secure supply chain, in essence, because the International Atomic Energy Agency monitors projects globally, and you need to be able to monitor that supply chain from a project site to the port and from the port to the conversion facility. So it knows that it's going, which end buyers it's going to effectively.
Right.
I hope that answers the question.
Yeah, absolutely. I appreciate the info on that and clarifying it. I think it makes sense if you can, cut and paste an existing framework that is robust and works well. There's no point in reinventing the wheel. So on the subject of government, so there, as you know, there's a new regional governor that's been elected in Puno region where the project is, Mr. Aduveri, if I pronounce his name right. He's had a history of being a little bit tough on mining projects. Reference Bear Creek's Santa Ana project. How does Plateau plan to meet the demands from local communities and established a sound relation with the new governor to advance the project? So what is the plan for kind of getting the hearts and minds on board?
No, it's a great question. So it's Walter Aduveri is his name. So he was elected regional governor last year and came into office on January 1st. As you mentioned, Walter was involved with some protests. It's, I believe, not only against the project, but the Bear Creek had, but ultimately Bear Creek's project was part of that. That project is a region of Peru. It's quite a ways from where our project is. We're in the highlands, right, and this is considered the lowlands, but it was much closer to the Bolivian border. So there's lots of things I'm sure you can imagine trade-wise that happen near the borders, legal and illegal, and depends on who you talk to, but I'm sure there is some element of the location of the project that came into play, and the presence of the government coming closer to some of that activity. What I can say about Walter Adiviri is, when we look at his political platform that he became elected on, he was elected regional governor on a platform of economic development for the area. So Peru is broken up into departments, and the Department of Puno is the region that Walter Adiviri is governor of. He was elected on this economic prosperity platform because the Department of Puno is quite a poor, call it a have-not department, if you will. I don't know if that's the right word, but and part of that is because the way the structure of tax flows and money flows in country, how it works is departments, any businesses, industries, agriculture, fishery, mining, etc., all the tax revenues flow into the central government, into Lima, and then get redistributed back out to the departments based on contribution. And so if you happen to be a department that doesn't have a lot of large industries supporting economic development, then you're not going to get much money back. So right within his platform, a couple of key things he's looking for are improved sanitation and water for sanitation, improved water access for agricultural use, education, nutrition, things like literacy and maths and nutrition. He'd like to formalize artisanal mining, which actually isn't anything new. Artisanal mining is something that Peru's been, formalizing over a period of time here. And this is, when I say artisanal mining, this is really small scale, often applied to gold, and generally high grade gold. When it comes to large industries within his platform, he said we have to support large industrial projects, large agriculture, large mining. Because as a good politician recognizes, you need revenue generation to be able to create jobs. You need to support industry to create jobs, and you need revenue generation to have money flow back in to be able to do things like work on things like healthcare and education, etc. So, Mr. Adiviri's never been a politician before, so I think he's kind of getting his feet wet. He's came out, and actually he invited us to meet with him in Lima, in Peru, when he came to meet in with the federal central government. Asked to meet with us, and to my knowledge, one of the only companies he asked to meet with. And he said to us, I wanted to make some introductions. I've been out to the communities in your area. You truly have a lot of community support for your project. Therefore, I'm in support of your project. He invited us in to come make a presentation on our project in 2019 once he was in office. And so I think that's a really good sign of the start of a productive relationship. But, obviously the good news doesn't always get out into the Western world. I think he's got a lot to focus on as he's in office. And he's surrounded himself with his advisors recently and appointed them, and some of them are very familiar with mining and how it works. And I think any regional governor, any politician, at the end of the day, the key is it good for the people? And are we creating jobs? Are we creating economic stimulus? Is it going to help me achieve what I said I would like to achieve as part of my political platform? So.
Right. I think it's good. He's only been in office for 10 days, more or less, and so I'm sure that a meeting is forthcoming again as you guys continue to do your work. So is it fair to say that maybe some of the community outreach programs could be geared towards, water treatment, sanitation, some education programs from coming from Plateau as you guys advance towards a development?
Yeah, absolutely. I mean, there's nothing I'd like more than to be able to, and again, as you say, as we advance through development, because as we advance through development, more capital becomes available, which allows us to, add to our social programs we already have. But doing a socioeconomic impact assessment is obviously part of the process of evolving the project. And that will really help us identify where the job creation opportunities are, where the training opportunities are. I am a big believer that with responsible mining, you can help build communities. And when I look at our two projects, in particular our lithium one, we're looking at a scale that could be a multi-generational asset. And you can really build some strong communities and sustainable economic development when you have things that, assets that last beyond kind of the conventional 10, 15 years, and you're talking 20, 30, 40, 50 years plus. Some of the programs we're already doing, because I think, I would love to be able to look at the educational piece, the nutritional piece, and whatnot, as we are working with University in Juliaca. We've had conversations about ideas, and we're at the stages of trying to generate some of those ideas of where can we be helpful. There's very little point in us coming out and saying, hey, this is what we think will be helpful. It's better for us to listen and then see how we can be part of that. But some of the programs we've been doing in the past is we support a milk program. So at the school, so for the kids to be able to get calcium and have some proper milk, we sponsor bringing in milk. We've recently started something. I think it was about Q3 last year. We were able to find some sewing machines, and we refurbished them, and then we worked with the women in the village area and showed them how to maintain them, and they're using those now for taking the wool from the llamas, right? Some of that high value alpaca wool, and they're actually creating clothes out of it. And then what we did is we've gone a step farther, and we've actually connected them with a market in Lima. So we're actually just working on a bit of a video to be able to show that, but to be able to connect them from something that's part of their livelihood, being the wool creation, and this is, alpaca wool is very high value wool, and to be able to create, sweaters and scarves and hats and things, and then have it go to market in Lima and be sold. I mean, those are the kinds of things that you can see last generations that are sustainable. And so, yeah, we're doing things, and I think it's the right amount of work for the stage of company we're at, and obviously we'll look to expand that as we evolve.
Great. Well, I appreciate the information on that. So moving on, what's the status of uranium supply agreements at Plateau? What do you have in place with Corzon Resources, and are you nearing a deal with anyone else? I just wanted to follow up with the announcement that happened, I believe, was in 2017, that you guys had some kind of an agreement in place potentially when you go to production. What's the status on that? Because we haven't heard anything about that since.
Yeah, so as part of my due diligence, I'm sure you can imagine I came across that. So I can say that agreement lapsed. I think, let's say there wasn't a lot of meat on the bone on that agreement, probably the best way to put it. But it did show there's interest in our product at the end of the day. So part of 2019 will be re-engaging with those conversations with off-takers. What we're seeing in the uranium space as a whole, because I think it's important to bear this in mind, is we've got supply last year, I think, of somewhere roughly 130, 140 million pounds against demand of roughly 190 to 195 million pounds. And that delta was taken up largely in the spot market or through some strategic inventories. But we've got Japan turning on reactors and somewhere around 3-4 years of supply is what we understand. U.S. demanding about 50 million pounds a year and arguably getting low in the next couple of years, and Europe, of course, and China. And so we've got a product that in production, we've got a product that's very clean and high purity. And so we'll be using 2019 to go out and engage with some of these bigger players. I'm not very familiar with Curzon, but certainly meeting with the Japanese trading groups and the U.S. trading groups, and having conversations with them about potential offtake. Often, because we're not an established producer, the offtake will look a little bit different than an established producer would take, in the sense of longevity and things like that. More because the offtaker wants to see you, deliver on the product that you say you have, and it's sort of an evolving relationship basis. So I know that one of our directors, Ted O'Connor, he's a technical advisor with us. He's 20 years with Cameco, has a lot of relationships across the spectrum of off-takers. So Ted and I have an effort, kind of Q2, Q3 leading into re-engaging with some of those conversations. And certainly the right time to do that now, because, up until 7-8 months ago, there really wasn't much life in uranium.
Right. Yeah, and with 232 going on in the U.S. and some other things that are starting to play out, production cuts, of course, and so forth, I think it's a good time to be looking at that. And you guys, an offtake would be a nice piece of the puzzle to get the financing to put this thing into construction and so forth. So, yeah, we're excited to see what'll happen on that front. And you certainly, with Ted there, you have a good lead into that kind of opaque group of utilities around the world that are a little bit odd to get to and deal with their procurement. Moving on to another question. So Ian Stocker, your chairman, he ended up selling during the last cycle of Uranium discoveries in Namibia and Niger to Areva for, I don't know, it was north of $2 billion in 2007. So on that case, are you guys looking at offers to take the project? Would that come? And are you guys also focused corely on going after a development scenario?
Well, I think it's important in when you're building any business is you build it and you make decisions. You evolve the business and you make decisions to build the project. If you solely focus on scoping out a project to sell it, then you're going to run yourself into some problems, and usually because the decision matrix is different. So certainly we're building a team around a team that can ultimately build the project. Having said that, I do believe in the case of our uranium asset, that this is a next cycle uranium producer. It certainly has the merits of that. It's financeable. It's got all the right economic metrics to be able to suggest that, and it's got the scale and size to be attractive to some of the bigger players out there, the more developed companies. So, hopefully that answers from a perspective of you need to build a team to be able to make it happen. Otherwise, you get left behind and you make different decisions. But because of the scale and size of this project and the economic profile of it, I think it's going to be attractive to a number of parties at the right time. And so, we'll consider those as we evolve.
Yes, and I just would note that with True Gold, you guys were months away from pouring first gold, and Endeavor came along after you guys had basically already were 95% complete on the project, and so I think it's important to plan for the worst, development, and a suitor might just come along just like True Gold.
Yeah, that's a fair comment.
We get this question a lot about production. When do you believe realistically Plateau will actually see production? Do you see it as maybe at this point with all the stages left to go? Do you see it as like a 2024 production scenario, or what do you think on that?
For our uranium project?
Yes.
Well, we've been doing some internal planning, and if we had the capital today, so assume we had the capital today, we could take our uranium project feasibility study within 18 months. Because so much work has been done in the past on the project, and then through permitting. So we're running a parallel path on our environmental impact assessment, which we think will take us, if we could do with the environmental impact assessment and the project going through feasibility study, roughly around 24 months, we think we'll have a feasible feasibility stage project that's permitted or near fully permitted. Excuse me, and then from there you'd have a build cycle of a year and a bit, and so sort of three and a half years we could potentially be in production. And that's lining up everything perfectly and project finance coming through on time and all of these things. But 3.5 to 4 years wouldn't be unreasonable.
Okay, so everybody kind of talks. We hear a lot of cash cost this and different costs. What is really realistically, give us, and I know you guys haven't done the pre-feasibility, so it's a ballpark, but give us a rough figure for the all-in sustaining cost per pound uranium at Macusani.
Sure. Well, cash cost is about just a little over $17. And if we take cash cost plus total life of mine capex, we're about $25 a pound. So our NPV break even is $25 a pound. We are doing some optimization work that were part of some earlier stage studies that Ted and Lawrence had done within the last couple of years. The budget wasn't there to run them fully to ground. But those optimization programs, we're looking at, can we pre-concentrate the material? So effectively what that means is, can we ultimately pre-concentrate the ore so that we're processing less material, which has a benefit in terms of the capital and operating costs associated per pound of uranium? And can we look at a modified processing approach, which could benefit us on the recovery and the timing of producing the Yellow Cake product? So if you look at 25, I think it puts that $25 all in. That puts it at a very competitive level amongst the developers out there today. And then if we have some wins on that optimization work, then we could be looking at an even better scenario.
Okay, yeah, that sounds good. And when you say the pre-concentration, are you looking at these various technologies that are available to kind of obviously reduce the ore before it comes in for processing? Is that what you're meaning there? Yeah,
so there was some work in 2013, I believe it was, by Cameco, because Cameco used to own part of this project. So in 2013, they had done some work on pre-concentration, and they had shown that 85% of the uranium sits in 50% of the material. And then there was some work done. You guys had engaged an external consultant who's got a background in pre-concentration. This was desktop work, and they looked at the mineralogy and came away with basically a similar impression, supporting Cameco's view that Cameco's work had shown. And so what we'll do now is we take it to an independent lab test with a sample, and they run through and determine. We're not looking at using anything unique. We're focusing on, can we pre-concentrate this on a conventional standard approach? And yeah, as you say, it's about throwing away the material that doesn't have uranium mineralization and concentrating more in the material it does. And then you put that through the process plant, but you'd be putting a lower volume through. So it's arguably a more efficient, sustainable way of mining too.
Right. So just a couple more questions on uranium before we move on to lithium. So moving outside of the project, moving on, kind of looking at a global view, are there any other uranium businesses, Alex, that you like at this point?
Well, I mean, I can't go without mentioning NGX in the Athabasca Basin. I mean, that's truly is a fantastic project. It's got grade and production profile inside, and obviously Canada has a pretty big contributor to the uranium production picture. So I certainly like that one. That's somewhere around a $900 million market cap, I believe.
In your mind, what is the biggest hurdle for uranium prices to kind of start their push higher?
Yeah, it's a good question. Well, I think we had a couple of false starts in 14 and 17 on uranium spot, and they pulled back, and I believe they're roughly around 6 months run. So we're 6 months into spot moving from arguably 20-ish to 29 or so today. It seems to be hanging in there. I think what we need to see to really, nail it home that this is part of a new commodities run is some new term contracts being signed at higher than spot. I think 232 needs to come through, and from various parties that I speak to, their view is that the U.S. utilities aren't going to sign new offtakes and new term contracts until they know the outcome of 232, because that may dictate where they have to source their material from. So my understanding is 232 goes to the president's desk in mid-April, and then there should be a final decision in, I believe it's July.
Right.
So I think that'll be an interesting validating point for the cycle. And then we'll continue to see Japan turning reactors back on. So they turned their 9th one on, it was around October timeframe last year. They had 53 pre-Fukushima, and depends on who you talk to, somewhere around 40 or so in total are going to come back online. So that's, roughly about another 10 a year for the next 3 years. So if we can, we continue to see Japan turning them back on, because these are big, serious reactors. Japan had 20% of the electricity supplied from nuclear energy pre-Fukushima, and now a lot of it's gas powered. So they're looking to get off of that and back to nuclear energy. So the other thing would be, Kazatomprom and Cameco being kind of two of the bigger players in the marketplace. Kazatomprom guided the market to say we'll be controlling inventory release to a $50 to $60 term price. So I'd like to see those things kind of play out more. But it's certainly, there's a lot of strong fundamental reasons, including new financial buyers in the spot market, that this first half of the year probably sets in a little bit stronger, and then I think the second half of the year could be game on if we're sitting strong.
Right. Half. Yeah, I know Yellowcake has another option to buy more from Kazatomprom here this month. I think they have to exercise it this month, if I recall, or at least the period to exercise starts this month. And then I think total globally, including Japan, I think there's somewhere between expectations of between 10 and 15 reactors being commissioned or being restarted total in 2019. So it's a pretty good number that's coming on this year, and also next year. Of course, it continues to go up from there. But yeah, I think that the long-term contracting is going to be key. So let's get 232 off the desk, and then we can move on to seeing who's going to be the first one who's going to get their feet wet in the market. And so I think I think it's looking pretty good. So I think 2020 is going to be exciting. 2019 certainly, and then after that it's going to be really interesting. So moving on to lithium, what is your view of the lithium market at this stage, and where do you see the price going? And with that, does the lithium asset at Plateau, Falciani, does Plateau see that as kind of an equal to the Macusani project, or is it kind of just a supplemental project at this point?
Sure. Well, maybe I'll start with the last question first. So I believe we're getting roughly 50-50 valuation in our marketplace today for our lithium project and our uranium project. As we advance the lithium project, we'll be looking to do a resource update in later Q1 of this year. We're de-risking it from a metallurgical perspective. We're hiring a lead engineer for the PEA. Once we have some economic parameters around the project, I think there's a good chance it's going to be equal or surpass the net present value of a uranium project that we have out there today. So until we have those economics, it's hard to give you an exact answer on that. But as a commodity itself, or lithium technically not a commodity, but as an industrial metal itself, I could see that the size of our asset, we've already demonstrated through the drilling and the results we put out that we've expanded it. Now we need to do the resource update to incorporate that expansion drilling, that we have like I said earlier, a multi-generational asset. So we have an asset that could last 30, 40, 50 plus years and be a significant contributor to the overall supply side of the equation. So why it's different than, a brine project, and similar to a hard rock project, but also similar to a brine project, is it's classic mining on the front end, and the processing side is going to be much more like a brine. But I think that's important to keep in mind, because I think because we are classic mining, we control the mining rate. So our ability to scale up as the market grows is why I think it could be a significant contributor to the overall marketplace. And the market's very quickly evolving for battery metals as a whole, and for lithium in particular. We passed the 1 million electric vehicles mark last year. We're seeing strong growth. We've seen the incentives in China for pure electric vehicles increasing this year, and the market is it's growing at something around 25% a year out to 2025, and then it nearly doubles again by 2028 and then beyond. And those are on reasonable electric vehicle adoption assumptions. And as it gets to that point in time, I believe that the marketplace, like we've seen in every other commodity, is going to focus on assets that can be a significant part of that demand picture. So if we can scope out a project that starts off reasonable relative to the size of the market today and can expand with that marketplace and maintain a significant market share, that's going to be a very valuable and desirable asset. Okay. So some background on the split between the two, but management-wise, we're focused on both assets because they're both fantastic assets. They hold a lot of value for the company. We have more work to do on lithium because it hasn't had as much work done on it relative to the uranium, but they're of equal importance for us from a management perspective. So if we switch gears and going back to your first question, the lithium market itself, I'm really excited about the lithium market. When I look at the mid and long-term outlooks from a demand perspective are very robust, I believe. We are seeing a part of the early stages of an electric revolution. I mean, this is going from horse and cart to Model T Fords. I honestly believe that. And we've got governments around the world not only pushing this agenda, but we've got consumers pushing it. And in the U.S., it's a large part of it's consumer-driven. And, I think we have to thank Tesla for really forcing the hand of all the car manufacturers around the world, because they're now announcing, and they have announced, billions of dollars of investments in electric vehicles. And so it's not far away before, VW, I think, is 2025, 100% electric. And you'll be able to buy a Golf or it'll be Ford or Chevy or whatever it happens to be. We'll have affordable cars. We'll have mass market cars that are electrified. And so that's really why it's part of a revolution. And I was listening to a talk at a conference last year, and the person was saying that, this is similar to when the first Motorola cell phone was made. And everybody thought there's no chance this is going to be mass adopted. Not everybody's going to have a cell phone, and the talk time is 20 minutes. Well, it kind of equates in a lot of ways to what we're seeing in electric vehicles, is that we haven't had mass adoption yet, but we're heading towards that point. And there's going to be this inflection point where it becomes exponential. And I think arguably we could say cell phone adoption is 100% now. And it didn't take long to get to quite a significant percentage of adoption by the time you had longer lasting batteries, and it was more readily accessible to the mass market. And that's what we're seeing in the electrification of vehicles. So I think what we have, though, in the short term is, I'll characterize it as noise. So late 2017, there's this spot market in China for lithium carbonate. And although it only represents 10% of the actual volume of battery-grade lithium traded, it was the only proxy investors had to how healthy that market was having, because the rest of the market's all settled with supply contracts. And the supply contract market has more or less been fairly steady throughout 2018. But the spot market in China ran from, call it $10,000 a ton of lithium carbonate equivalent up to north of $20,000 a ton, and then corrected back down to, I think it bottomed down to around just above $10,000 a ton, and trading in around 11,000 now. But all of the big producers globally, majority of them are supply contract base, and they're getting $12,000, $13,000, $14,000, $15,000, $16,000 a ton. So that softening in the spot market hit, and being the only barometer investors can look at, that hit the sentiment pretty hard, and that caused a lot of the lithium equities to pull back last year. But I don't think anyone can say the demand side is not real. It's happening, and will start to fall in place quite quickly, I believe. And then the other thing that softened expectations or sentiment last year was fear of oversupply, and fear that some of the big brine producers were going to simply be able to, pump more brine solution and produce more. And what we actually saw was the opposite of that. They weren't able to expand, partly because they weren't able to get expansion permits, partly because they're pulling fresh water, after they evaporate. It's a long evaporation process, about 18 months. They take the salt crystals and they process them and they reintroduce fresh water. Well, when you're at 4,000 meters elevation on a salt flat, fresh water is a hot commodity, and it's being used by other people in the area for agriculture and other mining, copper mines and things like that. And so water restrictions seem to be a theme, certainly in the Salar de Atacama last year, started to be a theme in the second half of the year. So as a result of that, what we saw was SQM, one of the world's largest lithium producers, Albemarle, another very large lithium producer, go across the pond to Australia and tie up big hard rock assets, because hard rock mining is more predictable and more scalable, generally speaking, than a brine project. And so that's why I think thematically, we take our Falciani lithium project, we grow it, and we get past the 2 to 3 million ton space that we're in now into an area where there's not as many assets that meet that size threshold. We demonstrate some robust economics on it this year, and I think it's going to stand out on the world scale.
Okay. Well, I'll save some comments just to keep it brevity, but certainly with China having government policies that are coming into place to enforce electric vehicles and so forth, that is certainly positive for the market. And can I, before I get to my other question here, can I characterize your view as, realistically at this point, lithium is stable going forward, but uranium has more upside?
Yeah, I would say that's fair. I think we've had three runs in lithium over the years. I think that hanging in around here at this level is a positive thing. I think the first half of the year might be just a little bit soft. I don't see any significant drops in price. I'd say soft. And I think the second half of the year is going to be a really telling sign about whether the price starts to move back up again, because any of the kind of additional supply concerns don't fall into place. So we already saw oversupply be less of a concern last year, even though at the start of the year it was a big concern. By the end of the year, it never happened. Nobody ever met their targets. And I think we'll see that play out through the first half of this year. And so I think the second half of the year will be stronger for lithium in terms of the price of the metal itself. And yeah, with regards to uranium, I think the telltale sign for me, like we were talking about earlier, is going to be term contracts, 232, and 232 more as a kind of that trigger point, if you will, for the U.S. utilities to start to lock down supply. And I'll be convinced we're in a longer term commodities run for the uranium market if we keep this momentum up that we saw second half of last year, and we keep that up through the first half of this year, and then see some term contracts get signed.
Yeah, and this time it's certainly been a little bit more slow and steady. So moving back, talking about the lithium project. So there's been a little bit of a occurrence of companies spinning out assets, separating maybe non-core assets or separating different minerals. So examples, Lumina spins out Luminex. Injex proposed in December they're going to spin out their, I think they have a property really close together, but one's in Argentina, one's in Chile. They're spinning one of their copper projects out because of the jurisdiction difference. And then also Equinox spinning out Solaris Copper, spinning out copper assets from gold assets. is there an idea that for potential suitors of your guys' lithium project, is there this consideration that maybe a suitor would be more interested if the projects were separated and the lithium assets spun out?
Yeah, no, it's a good question, Andrew, because I think there is a strategic review that certainly I've been thinking of, and we've been discussing internally. Is we have, oftentimes we have uranium-focused investors, and we have lithium-focused investors, and today, investors that are interested in our opportunity or company, they see the value here. That clearly the two assets are worth more than what the market cap is saying, so they see it as a value opportunity. And what we'll be focused on is I'd like to get our lithium project first through an economic study before I consider any kind of separation of the two assets. And really the reason for that is because I don't want to spin something out that's not going to have its own market support, because it's an asset at a stage that deserves that market support, if you know what I mean. Right. So rather than spin something out prematurely, let's put some value on the table for the shareholders. Let's then determine what the best next step is. Is it a spin out of lithium? Is it a spin out of uranium? Is it an asset sale? Is it a joint venture? I would like to find some dedicated capital, certainly, to move our uranium project forward, because it deserves to be moved forward to feasibility study. And I think it is one of those assets, when you look around the world at where the different development assets are. We've got a lot of government support to see it move forward. We've got something we could fast track to feasibility in 18 months. So that really should be moved forward quickly. And meanwhile, we've got things we can do with our lithium project. But certainly, it's conversation and it's considerations we have internally, and the right timing of that and the right way to do that is things that we need to work through 2019. But it absolutely makes sense to have some way of advancing each project with separate pieces of capital. And as you point out, ultimately, any suitor for either asset ideally wants one or the other, not both.
That's right. Yeah. So on kind of that same line, just a little bit. So with the lithium asset being 25 kilometers away, is there an idea that the production, the plants, et cetera, would be centralized, or do you see these? Because getting into my next question, do you see these? You're doing separate PEAs for each of these assets, or you have for the uranium asset. Are you seeing these basically standalone at this point, or do you see some kind of centralization happening?
Well, I think in the future, absolutely, there's synergies between the two assets. So from a National Instrument 43-101 perspective for PEAs, we have to treat them as two separate assets. We can talk about opportunities with the synergies, but we can't actually include those in any of the economics. But if you step back for a second, you've got two assets, as you point out, 25 kilometers apart. Why wouldn't you have a shared camp, shared maintenance shop, shared excess supplies, and a variety of things, exploration camp, fuel, etc., in a centralized location that benefits both operations? So that could actually add up to a significant amount of capital that you could save, and operating costs.
Right. Okay. So tell us on the studies, what's the next upcoming study, and when do you plan on having that out? Sure.
So we'll continue to see drill results coming out over the next couple of months on this expansion drilling. All of that is being brought into a resource update. So that'll be an update, like in terms of a technical report on the lithium project. That'll be late Q1, most likely, for the resource update, and then a PEA targeted for the end of the first half of 2019. We'll have metallurgical results along the way and optimization work to talk about. And then with regards to the uranium project, we'll update the PEA if the optimization work shows positive. So anybody following what we're doing, looking for news in sort of April, May timeframe on the outcome of that optimization work on the uranium. If it shows positive, we believe it has a positive impact on the overall economics of the project. And so we would want to update the PEA and call it Q3, Q4 in 2019. And then we've got a new sort of established a new value perspective, a new line in the sand that we take that through to feasibility study.
Okay. So give me, again, this question always comes, can you give me an all-in sustaining cost, maybe the high-end ballpark, a rough figure of what you think the lithium project production scenario would look like as far as lithium price?
I really wish I could answer that question.
Okay.
We're not there yet. Right? We have a work cut out for us.
Okay, well, answer this one. We talked earlier about uranium offtakes. How about lithium offtakes? Is there a desire to go after that potentially?
Absolutely, yes. So lithium supply agreements. A bit early to sign up supply agreements, but not too early to find strategic partners that might want to ultimately have a supply agreement with us. So again, in 2019, and it'll really be once we get that PEA out and established, and we can effectively market to the world that we've got this project. It'll be ongoing conversations throughout the first half of the year, and reaching out to various groups, these strategic kind of groups, and having these conversations. And then I think on the back of a robust PEA, then it's the kind of conversation that can then turn towards something a little more concrete. Until we have something in an economic study, I think it's unlikely someone will commit unless they really see the project for what we think it is.
Right.
But what I often find is people like to wait until a little bit more of that technical information is secure. But having those strategic conversations is critical, and the second half of the year will probably be more productive conversations on that basis, leading us into 2020, where I hope that we'd be able to talk about someone from a strategic angle.
Right. Okay. So why should investors be taking a stake in Plateau today? What would you say to the potential investors thinking about getting into Plateau at this point?
Sure. Well, firstly, we had a good run up last year on the back of the discovery and some more positive sentiment in uranium. In December, we unfortunately were exposed to tax loss selling, which I'm not sure if that's the thing in the U.S., but in Canada, people offset gains against losses on stock positions, and people had bought stock at kind of $1.20 and up. We're sitting around 75 cents Canadian today. So, we're trading in a range where I think we're bottoming out here. Part of my objective, over the first 12 months since joining, are to get broader market awareness, not only institutionally, but also with high net worth investors and brokers across a much broader spectrum. I'd like to get the company to have 4 or 5 core sponsors supporting our stock, and what I mean by that is we're at 2 today with Haywood and 8 Capital, but I'd like to see that expand. And as we hit these milestones throughout time, these are significant value events in the company. So I think every company suffered from a bit of lack of liquidity, I should say, in kind of the second half of Q4. We're hanging in here price-wise around this range, and we've got project-wise a lot of value to put on the table in the next 6 months. So I think for investors that want to take a closer look, I see a lot of value in the stock and in where we're going over the next little period of time here.
So Alex, how can investors reach out to the company for more information?
So investors can, if they'd like to email in and look to get response to some questions or arrange a time for a phone call, they can email ir@plateauenergymetals.com. And certainly that's probably the best place to start. And I'm happy to speak with investors. Obviously traveling a lot and in between things, but I do have someone helping out on the as part of our investor relations side that can answer questions and get back to someone.
And your website?
Our website is www.plateauenergymetals.com. Okay. And you can find fact sheets, our corporate presentation, and our news releases, etc. there.
Alex, we appreciate your time. Good luck, and we look forward to having you back.
Thank you, Andrew. I appreciate it.